Good morning and welcome to the market forecast. It looks as though things are going well. Again, I apologize for the issues yesterday. I was never really able to put my finger on any particular issue that was happening yesterday, but apparently things are going smoother for us today. Welcome. It's the market forecast, Tuesday, December the 26th. I'm John Hoagland. Thanks for trusting me with your time. As always, we're going to look at these markets in a consistent context and through the lens of risk management. It's a busy household here this morning. We've got, 2, 3, maybe 4 inches of snow on the ground. Been out shoveling. Dog's been talking a lot. Everybody's up and moving around, so it looks like we are ready for our trading day here. Hopefully, you are too. As far as economic numbers due out this morning, we had the Case-Shiller as well as the FHFA housing price indices just come out looking a little bit like they're on the favorable side. That's a good thing. We're also looking for 9 o'clock a.m. this morning Central Time, the consumer confidence numbers due out. Earnings really starting to hit stride earnings season right now. Already out this morning, Johnson & Johnson, Verizon, 3M, American Express, GE, and Lockheed Martin after the close today. One of the biggies, Microsoft, due out after the close, as well as Texas Instruments, as well as Starbucks. I know everybody's probably having their coffee now, so we'll see how Starbucks did after the close. As far as other news is concerned, I'm sure all you guys have been watching this whole short squeeze that's going on with GameStop and BlackBerry, urged by a Reddit board creating a short squeeze against some of the short sellers against GameStop and as well as BlackBerry. Rumor has it, some of the board members of these companies are using this short squeeze to sell out some of their shares. Seems like a good idea if you ask me. U.S. stocks indices anyway are to open steady higher, mixed-ish. As earnings seasons ramps up, as well as we have the FOMC meeting starting today, and we've got a pretty thick calendar of economic releases starting really tomorrow and for the rest of the week. Tomorrow we've got durable goods orders, and of course the gas numbers, the crude numbers. We have FOMC announcement tomorrow, as well as the Fed chair press conference. We've got GDP, international trade, jobless claims, and new home sales all on Thursday, and we wind up the week really with personal income and outlays. We do have a number of talking Feds, not only Wednesday after the FOMC meeting release. On Friday, we've got a couple of talking Feds also. So we've got a lot of things going on. As well as things going on, we also have our group coaching tomorrow. We got plenty of room. Come on in. Always enjoy those. It's always kind of strange when the group coaching lands on FOMC. So we're going to start, usually it starts at 1 o'clock. We're going to start about 1:05 to see if there's any opportunities for anybody to kind of look for opportunities for when that release comes out. Not expecting any major changes at this time, but we never know. As always, make sure you like, share, comment, question, feedback, heckling are always welcome. Make sure you subscribe to our YouTube channel. If you're enjoying what you're seeing, throw a like up there. If you're new to the market forecast or the market recap, welcome. We're glad that you're here. As always, we like to take a look and see who we've got in the room. And Felix, the infamous Felix Escobar, first in the room. Felix, you win the prize today. Rob, Ashton, Torres, James, Will, Bill, Patrick, Lemur, John, Murph, Matt Vladislav, Mr. Shine's Mystery Channel, Danielle, Guten Tag, Chef Mike is here, Troy, Michael, Level 2, Shane, meow, and good morning to you as well. Laura Bulldozer, Step 2, Level 2, send an email. I'll check that out as soon as I get a chance to go through my emails for you. Level 2. H, good morning. Caesar, Angelina, Keith, good morning. Clarence Bach, Prophet Eon. It's my pleasure, Taurus. I enjoy trading. I enjoy talking trading, and it makes me very happy when I see other traders doing well and reaching levels of success. So it's always my pleasure to be here with you. Esteban, Kevin Scott, good to see you. Hey, I can hear you. Well, that's a good thing, right? Buenos dias, senor. Good morning, Jason. Good morning, Josiah. Do you ever move your stop intra-trade? It's a great question, Josiah. One of the questions that people ask me the most is when they tend to move their trade. A lot of people like to remove the risk in a trade very quickly after the trade starts to go their way. So they're moving their stops to break even or break even plus one. And then they wonder why the market will tend to come back and hit that, get them stopped out on that trade, and then the trade will go ahead and play without them. It's because the market, the trade hasn't really proven to be invalid if it hasn't reached its point of invalidation. So do I like to move my stops that quickly? No. If I'm in a trade that I believe is a trend that may go all day long, I'm going to at some point to protect some of the profits on that. But that's an art form as well, Josiah. I think a lot of people tend to move their stops too close. They get stopped out on their trailing stop when if they just move that stop further away, a little bit further away, they may be able to stay in that trade and reach a profit target near the end of the day. Now, all of this is, of course, market state contingent. Nothing works the same way every time. 1 + 1 rarely equals 2 in futures trading. And once you do get the right answer, the market's going to change the questions. So it is as much an art form as it is a science in trading. So some folks do find an interesting and usable tool in the parabolic stop and reverse. I tend to think if we're looking at it in a longer time frame, the stops are going to be really far away. So if you're looking at a trend that seems to be very strong in one direction or the other in the day time frame, put on the parabolic SAR, shorten up the time frame on the chart, and see if you can't follow your stop using that parabolic SAR. And to keep you in the trade to a point of fruition or toward the end of the day, or just to keep you in it so you get more profit out of the trade. Great question. Okay. VIX, a little bit lower this morning at 22.93. Obviously, we had a pretty deep move to the downside yesterday. A lot of questions as to what that was all about, but we still have our all-time high in the overnight session in the S&Ps and in the Dow. Not so much in the Nasdaq. Nasdaq, we put in an all-time high yesterday during the regular trading hour session. But the markets don't like that. Markets don't like when you leave when the all-time high or a recent high occurs in the overnight session. The market tends to go up and recheck those levels in regular trading hours. We're going to see if we can't accomplish that for us today. The dollar index still holding up above that 90 level, holding on by a thread. We got to keep an eye on that if you're going to be trading in any of the currencies. Of course, let's take a look now into the into the crude oil daily chart. Interesting thing going on in all of these markets, as there usually are. We've got crude oil really just kind of range bound between $52 and $54. We mentioned that last week and perhaps even the week before that there's kind of a double weekly kickoff area in this market. We've got our balance area down at 52. We've got the balance area up here at 54. We've got weekly kickoff low down here at 50.75, and I've moved the weekly kickoff low a little bit into our range for today because I'm looking for if the market, if we can bring price up above 53.50 and spend some time up there, we may push our longer time frame traders to need to adjust inventory up there. Lacey is saying good morning to everybody. Good morning to you, Lacey. She's alone in the kitchen and she knows there's other people in the house, so she's complaining about that a little bit, but that's okay. She's our baby, and she can cry a little bit if she wants to. So, onto the 30-minute chart here. We had a pretty good increase in open interest yesterday on this move to the upside on the 30-minute chart. Really not a big range changer or a big game changer, just interesting information as we continue to stay in this area of balance and perhaps build more energy to one side or another once the market breaks out. So we've opened now with a gap. It looks as though the market is attempting to close that gap relatively early. Is our weekly kickoff high going to be in play today, this 53.50 level? Sorry, Mr. Shines thought his car was making a whining noise. No, that was the dog whining, and we're going to try and quiet her down a little bit. Where was I here? We've opened with a gap. The market kind of attempting to close that gap relatively early. We do have perhaps some overnight longs in this market. And again, I'm going to be really kind of looking to see if we can close this gap, if we can come back inside yesterday's area of value that might push us up to the downside just a little bit. And I'll be certainly looking for opportunities up near weekly kickoff high. All right, S&Ps. These markets are so interesting, so fascinating, and so challenging. It's always interesting just to see what happens. Josiah, open interest is not unfilled limit orders. Open interest is only open positions. Open positions. Yeah, she's a good Dirk. She's a good girl. She does want our attention, that's for sure. Impressive close yesterday after that stab to the downside. I was really starting to think that we may have created what we would kind of call a key reversal day, where the market opens, trades higher, and then closes lower off an all-time high like that. I was really impressed with the way the market came back and closed higher on the session. Pretty decent volume on that move. Pretty decent open interest increase in 13,000 contracts. And we are still holding upside structure, even though there's holes and there's weaknesses in this structure down below. We're still putting in higher highs. We're still putting in higher lows. Our all-time high in the extended trading hour session, will it fall today? It looks like it is already testing that level. Let's take a look at the 30-minute chart and see what we see. So here's our all-time high, okay? We are really just kind of pushing up against that all-time high / weekly kickoff level, moving towards the open here. Now we're going to open in about 15 minutes. Are we going to open with a gap? We don't really have any overnight inventory with which to worry about a move in the opposite direction. So we're going to probably open with a gap up against an important level of inflection and our previous all-time high, which occurred in the overnight session. We see some participation and some volume building above this. We could create a new continuation leg of this move to the upside. If we fail, if we put in a new high and fail and we close lower, that's going to be one of those possible key reversal type of days. So I'm going to be watching the open. I'm going to be watching the gap. I'm going to be watching the weekly kickoff high. All of this in play. Do I know what's going to happen? No. Does anybody? No. We're going to have to wait and see. We've got some pretty good levels to work with to limit our risk. What's one of the things that we look for on the market forecast here? We look for ways to limit risk. Risk limitation, risk management is number one on our list, and number one in our minds when we're looking for opportunities. And this weekly kickoff high, the all-time high that occurred in the overnight session, could be one of those good risk limiters. If we can't get above it, we get back inside range and value from yesterday. That could bring in the value area special situation play that could take us right back down to our overnight low, perhaps to our low of value from yesterday. Again, one of those situations where we open higher, close lower might be a little bit ominous for continuation to the downside. The Nasdaq. Nasdaq has the weekly kickoff high in play today. It also has the all-time high in regular trading hour sessions, but unable to close above there. What are we looking for at these important inflection levels? We're looking for acceptance and continuation or failure and for the market to turn around. Not suggesting that yesterday was a failure, that just the market was not quite ready to get that continuation up there yet. We lost about 400 in open interest yesterday, which I do find interesting, but the market continued to try and move higher on higher volume. That's usually a good sign for the auction process for some sort of continuation. The upside structure, it still remains strong to the upside. Yes, there are weaknesses in the structure down below, and we're going to be probably seeing those if the market turns around and heads back in that direction. We know how resilient our equities markets are. The markets are really just kind of grinding back to the upside. We've got a little bit of acceleration here on the 30-minute chart. We're not going to probably have any kind of gap here. We have no overnight inventory. We've got weekly kickoff high in the neighborhood. We've got our all-time high, which happened in the overnight. It's going to be another interesting situation. Are we going to be able to accept above this weekly kickoff high, which we were unable to do yesterday? Will Batman show up and save the day, or will he not? That's always seems to be the question. So we're going to open inside range. Value area, if we do, I don't think we're going to. We're just kind of holding here around settlement with no overnight inventory. If we do open inside value, I'm going to try and stay a little bit patient this morning. We're going to probably get an early look at the weekly kickoff high and our all-time high early in the session today. Watch for acceptance in time, volume, momentum, and participation. Gold, another one of our fascinating markets. Mind you, I've got the April chart up here. There's a $4 premium for April, but the volume still seems to be in the February market. So you should probably still be trading February by the end of today or tomorrow. You should probably be moving to the April contract. But think about that $4 change, that $4 premium in April if you're going to be looking at the February contract here. Last day for February. Rollover indecision seems to be reigning here. We've got an inside day from yesterday to Friday. We've got an inside day from today to yesterday in extended trading hours. The market is really kind of range bound and kind of exhibiting rollover activity where the longer, stronger traders are more interested in trying to get a cheap rollover than becoming directional. So keep that in mind. We added 1,500 in open interest on a doji type of day. That's really going to kind of prove as somewhat moot. Nothing really to look for as far as continuation in an auction process in either direction here. Looking at the 30-minute chart, here we are inside range and inside value from extended trading hours yesterday and even regular trading hours yesterday. No overnight inventory, opening inside value, unable to trade outside of value for very long. Just try and stay patient. I'm looking for this market to kind of present a early range, and then I'm going to work that range at the extremes if I'm even going to be trading this at all. The gold is a little bit off my radar this morning. I'm going to, of course, be keeping an eye on things if something changes quickly. But for all intents and purposes, I'll be focusing on probably our equities more than anything this morning because they are kind of promising decent, cheap opportunities and potential bigger moves. Back to our currencies, the euro. We've got what appears to be as Brian, rational investor, was noticing tomorrow in another market, or yesterday in another market, we've got a little bit of a head and shoulders going on here. If we can't hold this 121.90 weekly kickoff low, I think we may be in for a pretty decent move to the downside. And of course, a lot of that depends on the dollar being able to hang above that 90 level or even move to points higher. Volume pretty steady. Open interest, we added 1,200 yesterday to the downside. Not hugely impactful. The 30-minute chart here, we've got no real overnight inventory here before the open. The market really kind of moving back towards to close up some leftover unfinished business to the upside here. We've closed the gap from yesterday. Looks like we may be headed towards point of control or basically, which is settlement from Friday, but we're seemingly having a little bit of trouble heading in that direction. Modesta, why don't you look at the Russell 2000? Well, we're already going to be changing one of the markets we're looking at. We're going to be taking off the Japanese yen, which here it is, and we're going to be adding the 10-year. We already look at two U.S. equity indices, which are the S&P and the Nasdaq, and we're trying to keep the forecast in a reasonable amount of time. The more markets we add, the longer the forecast is gonna tend to get, and I like to be done before the 8:30 regular trading hour open for those equities. But if that's what we want and more people continue to ask for it, it's something we would certainly consider adding. Good question, Modesta. So the Japanese yen, we do have this rising triangle, which remains. It is probably building some energy. We'll look forward to an opportunity when we see the market coming to this trend line. We had a decent opportunity at it yesterday, overnight last night, holding there. We're going to be looking for opportunities in the continuation outside of this. If we get some momentum and build some time and volume above this weekly kickoff high, we're going to look for continuation to the downside. If we can build some momentum and some time and some and some volume below this trend line, we'll look for a move in the opposite direction. Anything in the middle, we're looking for reversion trades. We're looking to kind of close that opportunity at those extremes towards the middle. Now, we've opened a little bit here with a bit of a gap, basically filling in some unfinished business from the past few days. We've now closed this gap from Thursday to Friday. This is Monday. This is Tuesday. Just making sure that I'm on the right day here. We've taken the market to a prior weekly kickoff level here, which is this 655 level, which seems to be showing a little bit of resistance. It's kind of grayed out. It's a little bit used up, I'm thinking, but still may provide some decent opportunity. As long as we don't close this gap, I'm going to be looking for opportunities to continue to see this market move higher, but just kind of looking at the opportunities to the upside. Until we break out above that weekly kickoff high, I see the opportunities being small. This market is somewhat off my radar for the day. So great questions, great thoughts, great ideas as always. That's the kind of feedback we're looking for. We want to provide the information that our traders are looking for. So we will, be thinking about taking a look at that Russell. We're already adapting to put one of the treasuries into the market forecast in the recap, and we'll look forward to seeing how that works for everybody. Esteban's wondering why the NQ fell really fast, 2% in the session yesterday. A lot of folks are probably thinking that. And it wasn't necessarily the move to the downside because it wasn't deep enough, I think, to really break any kind of structure. It was what happened afterwards. It was the recovery after that I found to be most interesting. The market could have certainly closed considerably lower yesterday, but buyers still came back in and pushed this market to close higher yesterday. So a very interesting trading day yesterday. I have done good. We've got about 4 minutes left before the equity open. Dan is still out. He's going to be out tomorrow again, and kind of forgot yesterday morning that he was going to be out of town till Thursday. So I will be back with you for the market recap today. We'll take a look at what we thought about this morning, how these markets have played out. Don't forget, we've got the FOMC meeting. So some of these markets may become a little bit muted as far as activity is concerned as we wait for that information to come out. Lots of eco numbers the rest of the week. Keep that in mind. Take your deep breath. Stay humble, grateful, and creative today. Looking forward to seeing you on the recap this afternoon. We'll have a little fun. We'll find out what the news was, what happened on this date in history, and maybe we'll even find out what Led Zeppelin was doing in 1975 on this date. Boy, I just love when this day in music includes the best band in the world, Led Zeppelin. We can agree on that. Anyways, get out there and profit, trade well today, and we'll see you on the recap.